Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting firm owner who wants to learn how to provide virtual CFO services, then this podcast is for you.
Welcome to today's episode. Once again, I am joined by Adam Hale, the COO here at Summit CPA, and we're going to talk about a really important topic. Oftentimes, I'm involved in the interviewing process with our CFOs and also talking to other firms that are trying to do similar things to what we do. And the question comes up, I love the model, I love the idea, but how in the world am I going to fill that much meeting time with just me talking? And so what we're going to talk today about is ways to set up structures, ways to set up systems to make sure that those meetings are filled and that the client feels that they're getting value out of those meetings. So Adam, why don't you start with kind of the evolution of where Summit went in terms of our meetings and what we did in order to make sure we were filling enough time with the clients?
Yeah, I think the most important thing though, like before we dive into like agendas and cadence and everything, is just to remember that the client's the one that has all the answers. You know, we talk about that a lot too, just in how you communicate with the client. Of course, they know their business better than you do. We know business, we know finance. Like that's where we need to kind of stick and stay in our lane and ask questions related to that whenever you start to hear them kind of talk about the vision of the company, what they're trying to do. So a lot of times they might not have the proper framework of what they're trying to do or how they're trying to do it. And that's what we really need to kind of tease out of the conversations whenever we meet with our clients. So again, nothing to do with a specific agenda there. It's just more of kind of a mindset whenever you go in, because it can be intimidating, you know, thinking about, hey, what am I going to talk about for the next hour? It's like, well, the client's got the questions. The clients have actually the answers too. It's really our job to tease those out, connect the two together in a more tangible way as it relates to the financial forecast and such.
Yeah, I remember when I first started at Summit, that's one of the first pieces of advice I received is that, the secret to consulting is the client has all the answers. I think that made me feel 10 times more comfortable than any advice I ever received at Summit, just knowing that, okay, the client knows their business, they know the answers, they're going to get there. You just have to ask the right questions and you have to have the proper communication, the proper channels to get them there. And that to me, that made a big difference as I was doing the CFO work.
Yeah, so that's on the foundation side. But then the frustration point comes from the client, who's going to be on the meeting? Because a lot of times our clients have 3 or 4 different people that we might need to talk to or want to talk with, but they're not fit for every single meeting. So you want to be, respectful of their time too. And then I think that where the meeting agendas come in and the cadence is just also understanding, what we're going to talk about that day. So they're prepared for their questions or any homework that they might have had in preparation for the meeting. So that first piece of advice is kind of more behind the scenes. And the second one, like I said, is more to make sure that the client is prepared mentally and potentially if they had some homework, like I said, in order to kind of get things going. So
I think that's one of the key changes we made early on. I know one of the things we were doing probably 2-3 years ago was we would have a weekly meeting and it was just called weekly meeting with the clients. And I think that was something that, they never knew what to expect. They didn't know who was supposed to attend. And so it took a little bit more work. But having a monthly meeting where, the first meeting of the month, whatever the topic is, you invite it to the right people and you kind of talk about in generalities what you're going to talk about in that meeting. I think that made a big difference for the way we were providing our meeting cadence and schedule, because like you said, they knew they had to be prepared for it. They knew what they had to have ready when they walked into that meeting. And you didn't have, the marketing person missing from a pipeline call, or the BD person missing from a pipeline call. So I think that made a big difference for us in terms of a lesson we learned pretty early on.
Yeah. And the long list of learning lumps we've had here, that's definitely one of them. I think we had the first part, right? The consistency, hey, every Monday at 2, we're going to have this call. Everything was kind of open skate, which are always frustrating because you do have to kind of, not only for the client, but even for the internal team member, just kind of thinking, okay, what silver bullet am I going to bring to the conversation today? How am I going to help enlighten the customer? So, but even if you have the skills of the consulting, it's still, having that meeting agenda really helps out quite a bit. So,
yep, definitely.
So on the evolution of kind of where we came from, I think that we still have transactional service. That's what we coin it, which is kind of your monthly write-up where you meet with the client and you go over the financials, that kind of a thing on a once a month type of a basis. I think a lot of CPA firms do that. Some of them just prepare the financials and send it to the client, maybe meet semi-annually or quarterly or something like that. We always, from the get-go, wanted to make sure we were having that conversation monthly. And that conversation's super simple because it's all about the financials, so it's about how did we perform, what looks weird. The only thing that really, I don't know, personally, I think it requires a lot more skill and talent to do that because you don't have any context. And context, I mean forecasting. So on our transactional write-up services, it's like, hey, this number doesn't look right. Maybe you know the answer, but you really don't have any context in what it should be. Now, you can use common size things for your percentages and kind of know what it's supposed to be. Don't get me wrong, like there's benchmarks and stuff for it. But not having that custom fit forecast is really kind of makes that conversation difficult. But nonetheless,
yeah, for sure. I think especially from coming from the audit world, like when you're in audit, you talk a lot about expectation. And I think, when you're supposed to compare numbers, you're supposed to compare against expectation as one of the values there, one of the foundations there. And I think when you're walking through a financial statements, having the expectation makes the conversation go a lot better. To Adam's point, you can talk about what you did last year. You can talk about what you did last month, but sometimes that's just not relevant. And sometimes what's relevant is we know December is going to be a lower revenue month. And that's just an expectation because we lost a contract or because something happened or we knew a lot of people were taking vacation this month, whatever that reason is. That expectation is a great foundation for comparing things. So it makes those conversations a lot easier.
Man, I didn't think you could make the accounting conversation any worse bringing up auditing. Man.
Sorry, that's my background.
So yeah, I know. So let's focus. Okay, so you're 100% right. I mean, not having that expectation to bump up against is makes it a difficult conversation. But nonetheless, that's what the conversation is. It's super simple. How did we do? So that is one of the core meetings, obviously, you have to have with your client, regardless of the frequency. Whether you're meeting weekly, semi-monthly, or just monthly, that is the most pivotal conversation. So our next service up, our controllership service, is kind of for those medium-sized clients. So the transactional is for, the very small clients, usually sub $1 million. We don't really have a whole lot of those clients in our portfolio just because we're probably a little too expensive for, something that they could get where maybe they don't need all the guidance. So the controllership service, though, is kind of like that middle ground. So I would say those are the clients from about $1 million in revenue to, I don't know, what do you think, Jamie, like 3?
Yeah, I'd say 3 is probably about the point where they start needing a little higher level service.
Okay, so between 1 and 3, the controllership service is kind of that medium level. So we're typically meeting with the client twice a month instead of once a month. And so what the meeting cadence looks like for that is once a month, we're talking about revenue rec with forecasting. So we're closing out the books, but then we're talking to the client about proper revenue recognition. I don't know if we've ever ran into a client that actually does revenue rec correctly. Have we?
Larger clients, definitely not at the controller level, but I think there's been some pretty large clients that have come to us. But no, for the majority of the time, even if they think they're doing revenue rec properly, they're not.
Right. So we all know there's millions of ways to mess up how to do revenue rec. But regardless, in order for us to do any kind of forecasting, we need to make sure revenue's in the right spot and it's in the right month, that kind of thing. So that's kind of our focus, is just closing out the books with the revenue recognition and then using that revenue rec to project or change our projections going forward. Because we know what we planned for the prior month. We can talk about that quickly after the month close. We'll readjust the forecast, readjust the plan. So there's a little bit of shaping and molding the forecast that can happen in a controllership meeting. And then the second meeting is going to be the financial performance review meeting. So forecasting meeting, which includes the revenue rec. And then the second meeting is more of the financial, performance review.
Yeah, and I think the obviously that first meeting is key to that controllership services. So kind of what Adam talked about earlier is, it's really hard for us to do the financial statement review. Not that we don't do it, but it's hard for us to do that review if we don't have the forecasting. So it's a very natural next step, and it's a very natural next step up in services is that, we're doing your financial statements for you, but wouldn't it be nice to have an expectation for what the next 6 months are going to look like? So it's really an easy process to move someone from that transactional to controllership, but also talk about what it means, because forecasting really is that consulting services that a lot of clients aren't getting.
Yeah. And so my favorite subject, which is leverage. This type of service is also where a lot of our clients start using us to help manage cash flow. In some instances, we'll pay bills, that kind of a thing. But typically, we're forecasting for like a short-term cash flow, like 13 weeks out, getting real granular with who owes us money, who we owe, timing, make sure there's no business interruptions due to poor cash flow. So this is where the other person on our team, so not the CFO, is going to lead a 15-minute to 30-minute call per week with somebody on the client's team. So if they have an internal accountant that's doing all the bills, doing all the invoicing, that's the person we're going to meet with, and then we're going to give a summary to maybe the owner, or perhaps the owner's on there. Again, it's a smaller company. Maybe they have more of their hands into everything. But again, this should be primarily driven by the senior accountant in our position, the accountant that's on the client relationship end, because they're the one reconciling the bank account, using the tools, putting together the cash flow. And that is a weekly cadence. But we tell clients right away, it's going to be 15 minutes to 30 minutes, depending upon questions, depending on how the work's flowing. At that time, we're planning out. It's also a great way to keep clients on their toes with their AR. I mean, how many clients do we have whenever, it's always like, how do I collect faster?
Yep, it's a very, very common for that to be one of the first questions our clients ask. Is a lot of times that's even a reason they come to us, is that our AR is getting too old and we need to figure out a way to manage that process better. And so, having that conversation in this meeting is very beneficial for that, because you can't collect what you're not aware of. And if something's getting close to that 30 days, it's better to be ahead of it and say, we're getting close to that due date. Let's make sure we keep an eye on it, as opposed to, it's at 60 days now. We haven't even reached out to them yet. So that just having that weekly conversation keeps them on their toes.
Absolutely. And lets them see the impact. Like, hey, we're not going to be able to make payroll in 2 weeks if we don't get X, Y, and Z in. And so by having that conversation, it's super helpful. And then what it also does, this is kind of the internal cheat, is it gets our team super familiar with the details. So we all of a sudden know who Jamie is. We know who Adam is. We know who Summit is. And we know where all these different expenses are because we're having conversations about them. So whenever we go to do our month-end close, it makes the process way faster, because if things are miscategorized by their internal team, whatever, we can see that. We know it doesn't belong in office supplies. We know it belongs in professional fees, or, whatever that is. So I think that insight for me as well is another reason why I push that service. And then, of course, the client gets to clean stuff up too.
Yeah, and one last benefit too is that for our seniors, it gives them training and work with talking with the client. And again, we don't want accountants to come and work at Summit and just be in a back room plugging away at numbers. We want our accountants to be people and to be able to get in front of clients and talk to them. And if they're talking in these meetings, if they see something during one of the other meetings that I'm running or a CFO is running, they're not going to be afraid to speak up, because they're used to talking to the client. They have that familiar voice with the client. They can say, hey, one thing I was thinking about is this. And to have that partner, as opposed to just someone doing work for you in a CFO meeting, goes a long, long way.
Yeah, exactly. I mean, it's just about cleaning things up as you go, because it's also an opportunity to, throughout the week, if there's weird things that people are throwing to ask my accountant or ask my client, that's our opportunity to hit it in real time and get it shifted over. So that meeting is pretty essential. So we sell that with our controllership service a little bit more than 50% of the time. So that's a pretty big meeting for us. Again, so now we're talking about 2 meetings or 1 meeting a week from the accountant's role, and then every other week pretty much with the CFO. And you can actually, in some instances, move that revenue rec meeting off of the CFO if you wanted to even leverage yourself a little bit better. And the CFO really needs to pop in on that financial performance review. Now, you might have an internal meeting prior to that, of course, to get on the same page with the accountant so that you're not telling a different story than what they've been hearing and seeing, because they're going to be closest to the information. I think that's super important too. Internal meeting.
Yeah, no, I agree. I think if you're going to give up the revenue recognition, I think the big thing is understanding it, because obviously that's the most important number to most of our clients is how did I do this month? And that comes from revenue. So if they had $400,000 in revenue, but you have no clue how accurate that is or what customers caused it or any of that stuff, that you really are going into the meeting blind. So it is really important to review that revenue recognition, get your hands on it and make sure that it's reasonable and makes sense. Because the last thing you want to do is say, hey, you booked $400,000 this month, and then 2 months later find out the senior accountant was making a mistake or data was coming in wrong, and that $400,000 month was actually only 200, and you have to go back and fix it 2 months later, which is just never a fun conversation to have.
Yeah, which is where the KPIs come in, because that revenue rec is probably going to have a lot of its hands in some of the KPIs as well. So really, if you don't get that part right, it's going to get super messy. But I do think that regardless of whether you're in that meeting or not, it's really good to have that closed meeting internally with your other person, because again, they're going to have conversations with the client that you don't have. They're going to be handling communication that you don't see, vice versa as well. The client, this is your opportunity also to loop in the accountant on bigger picture stuff and let them know. Just that way they can have their eyes and ears open whenever that stuff does come across their desk.
And I think that's a huge part of leverage is if I'm not going to attend all the meetings and the senior's not going to attend all the meetings, we still have to communicate with each other. Maybe the client made an off comment about, we're thinking about adding this new product going forward. And we had a little bit of conversation about it and the senior never hears that. And then, 2 months later, they start doing it and the senior's like, oh, I haven't heard about this before. That looks pretty bad on us as a client provider. So it's important just to have those conversations and say, hey, what did you talk about with the client this week? This is something I heard, and just kind of have that touch base so you're aware of those things as well, because you want to make sure we look like a team, even if we're trying to leverage each other as much as possible.
Yeah, and I would also say on the cash flow call, it's not that the CFO can never be in that call, because the CFO can cover for the accountant if they need to. Also, if there's really bad cash flow stuff and you got to do some gaming of where things are going to be, sometimes that's a good opportunity for the CFO to kind of add weight to that conversation too, to help clarify direction, calm nerves, and make sure everything's going great as well.
Yeah, no, definitely can agree with that. So we talked about the transactional services. We talked about the controller level services. So let's bump it up one more level. So what does the CFO meeting schedule look like?
Yeah, so this is whenever we're talking about typically 1 to 2 meetings a week. So the cash flow still, let's just assume that we're doing cash flow for our VCFO client. That's that separate weekly call. We already covered that. Now on the VCFO side, we typically like to create a leadership call. So that's kind of, back to your original point, like, what's this thing look like? We used to call it just weekly meeting. Now we call it the leadership meeting. And the leadership meeting takes a couple different forms. If the client has a pretty big internal executive team, then we can join that call. We can update the first few minutes on the cash flow, if everybody's privy to that kind of information. Or we can give some kind of other dashboard or report, during the CFO time. So maybe we have like a 5 or 10 minute carve out to do a little one-off conversation in that weekly meeting. For clients that they're a little bit smaller, we will typically come up with the agenda for each one of those things. So we'll have a biz dev call where we want to talk pipeline and see how the sales are going and just gut check the forecast, make sure that we're holding the salesperson accountable. We'll have another meeting where it might just be dedicated just to, again, the revenue recognition. That might be another call where we're talking about some forecasting. Then we might have a more formal forecasting call with different people on the team. That could be, and then we'll have our performance review meeting. There's a couple of those side meetings that have to happen.
I think this is where we get a little bit snowflakey sometimes, is that, occasionally for our CFO clients, they have special needs because they are our highest paying clients and they are a lot of times our largest customers. So like you said, like some clients might want you to run a business development meeting where you're running the pipeline, you're doing all that calculation. Some client may already have that covered, but they still want to have a meeting about something else. One of the meetings that sometimes I'll have is a project meeting where we're just touching base about, okay, what are the active projects we're working on? Because everybody's had those clients where they're constantly throwing stuff at you. Oh, we need you to build this for us. We need you to build this for us. We have this question. And if you don't have that meeting where you're just updating the status on those projects, you're going to miss out on it. So you kind of have to, this is where you read the client and figure out what their biggest needs are. And that kind of fills that fourth meeting oftentimes is what makes the most sense for this client. And oftentimes if they're already having a leadership meeting, if they already have a leadership meeting where they're talking and they have a great agenda, sometimes it's just you attending that meeting and listening and throwing your 2 cents in at the end, or, having your dashboard that you report. So this is where we do get a little bit unique to the client based on their needs, because they are that highest level of service.
Yeah, I would say though it still comes back to need for the agenda. Like you said, some of our clients have a very tight agenda. A lot of them follow the level 10 EOS kind of structure to where we're able to, it's very structured. And then others are a little bit loose and maybe we run a couple of the meetings per month, that kind of a thing. And it's also a great way to get sticky with other people on the team as well if they don't have that leadership team, because then you can find out who the other key players are on the team and maybe have a one-on-one with them to kind of talk through their part of the budget or the forecast, that kind of a thing as well.
There's a large benefit to that. I think that Adam's used the word stickiness, but the big thing is if the client's evaluating their budget and they're looking at all their costs, you want as many people going to bat for you as possible. You want the marketing guy saying, "Oh, I can't live without that summit meeting we have." You want their CEO saying the same thing. So the more people you have going to bat for you, the easier you're going to be that cost they need to have when times are tough. So I think that's usually when you say the word stickiness, that's usually what I hear.
Yeah, no, absolutely. And then, of course, whenever it comes financial statement time, we'll lead that meeting as well. But if they do have a leadership team, it might be an abbreviated, an executive summary. So sometimes you might have to split that meeting out between like just the owner, where you get super granular and talk about everything. And then other times you might have more of a high level. So it is a little bit more custom. We always tell the clients it's between 4 and 6 meetings a month is what that typically looks like. We try to keep it to a weekly cadence, so it's typically just those 4, but sometimes you have to have those spin out meetings, especially if they already have a very defined leadership team meeting, because then you will have to have a separate rev rec meeting, that kind of a thing.
And forecasting. I mean, forecasting is always necessary. And sometimes that conversation's quick. Nothing's changed this month. Let's keep things rolling as they are. But sometimes that conversation can really go down a rabbit hole and take a full hour where you're talking through some plan they're planning on implementing. And you're like, well, let's play it out. Let's see what happens if you're 50% successful at it. Let's play. And, you kind of go through those scenarios and that can take a little while. So sometimes, the owners really finds that really important, but, all 6 people in their leadership team are like, okay, this is too much details for me.
Well, and I think you bring up a great point. I mean, nobody wants to be in a meeting where there's nothing to be said and you're just kind of filling air. So I think that whenever you begin an engagement, explaining to people that it's up to an hour, and we usually recommend, by the way, 50 minutes. It's kind of like whenever you go to get a massage, you get a 1-hour massage, you're only getting a 50-minute massage. Like that's the reality of it, because they need time to prep the room, go to the other you know what I mean? Like they need that in between time. They can't stack every hour on top of one another. Even though we're hopping in and out of virtual meetings, it's the same thing for us.
100%.
You need a little bit of, well, you got to go to the bathroom or you got to grab something, or maybe you have to review an email before you hop on a call with a client, that kind of thing. So I highly recommend setting 50-minute meeting times rather than 1 hour. Make sure that you make that clear to the client at the beginning, even though it's on their calendar for 50 minutes. Like, hey, we got 50 minutes today. Let's cover this, that, and the other. And if they don't have a structure, look into EOS, look into doing a level 10 meeting. I think that structures, we use it internally here at Summit. I think it works really well. You can get off track a little bit, but you can always try to reel it back in with that kind of structure as well.
Yeah, no, I definitely agree with a lot of what you said there. So real quick, I want to throw our email address out there. So we want this show to obviously evolve and we want to get your input as the listeners. So if you have any questions, any recommended topics for us, please feel free to email cpa@summitcpa.net. Again, that address is cpa@summitcpa.net. We'd really look forward to hearing from you. So Adam, we're getting a little close on time here. Any final topics in this area or discussions that we didn't get to yet?
No, I think we covered everything. Again, it's just about keeping it light, setting expectations, and going with a regular cadence. Even if you have to move that time each week, go ahead at the beginning of the relationship and say, hey, we're going to meet Mondays at noon. I think that's super important. This is what we're going to talk about during the call. Go ahead and put it right in the meeting the meeting invite, what the agenda is going to be or what the structure of the meeting is going to be. That'll go a long way to making sure that you get in and out. And if the meeting only takes 10 or 15 minutes instead of an hour, like make that clear. Like we're not here to fill the hour. We're here to solve this problem. And if everything's good this week, it doesn't mean that I want to pass on the meeting. I would still talk to you for 5 minutes before we cut. because that regular cadence is going to be great. Because if you don't do that, what you'll find is you'll push meeting after meeting after meeting after meeting. Something will blow up, and then they'll be like, well, you never meet with me. You're not doing what you said you were going to do. So even if there's nothing to be said, show up, talk for 5 minutes, see how their day's going, talk about kids, doesn't really matter, move on.
Yep, I can definitely agree with that. I think the two things that I would take away from this podcast is there's two pressures you feel when you get into this business, and I think one of them is, to Adam's point, you're gonna want to fill the time, and that's a big mistake. Again, if you have topics, you don't want to like rush through it, but if you've talked about everything you want to talk about, and you can tell the clients talks about everything they want to talk about, just end the meeting. Don't say, oh, let's just sit here for another 35 minutes and try to come up with stuff. That's the one thing I think you feel a lot of pressure of when you move into this service. Now, a lot of your meetings will go the full hour, but that's fine. That's good as well. But again, don't feel like you have to hold that full 50-minute meeting. And I think the second is the silver bullet. Adam mentioned this briefly, but I think that there was a long time at Summit where we were all talking about, I feel like I need a silver bullet every time I talk with my client. You don't need a silver bullet. You don't need to be fixing their business every time you talk. You don't need to come into every meeting and be like, wow, Jamie just changed our whole life with this one meeting. That's not the point of our business. Our point of our business is to have a structure, to provide services that are important to them. But, don't feel like you have to come to every meeting with this great idea that they never heard of before.
Yeah, because businesses, when you're running a business, it's like you're on a huge ship. You're not in a race car. You're not going to be able to go left, go right really super fast. For us, it's just about being that center of gravity for the client. The North Star is what we talk about all the time. Every Monday at noon, we're having a conversation. If you have questions, I'm going to be able to give you my advice. We're going to be able to work through problems, do those kind of things. If you can do that for the client, that's the true value add. It's not coming and telling them, oh, hey, you've been running a successful business for the last 10 years. You totally missed these 5 things, and I'm going to show them to you. Otherwise, we would just charge an absolute fortune with those, hand them over, and we wouldn't be talking about all this other nonsense. But that's just not the reality.
For sure. I think that's a lot of times when clients come to us, that's the number one thing they're coming to us for, is just consistency. Like a lot of times they know what their financial numbers look like, but they haven't looked at them in 6 months. And so the fact that you're doing these things every month routinely and they're never going to be missed is what they're looking for when they come to you with these services.
And if they're not, tell them that's what they should be looking for.
Exactly.
So sometimes you got to do a little bit of that too. It's all about expectations. So
for sure.
Cool.
Well, Adam, like I said, I think this was a good topic, and I know hopefully it calmed a lot of fears out there of people that are listening to this podcast thinking, I'd love to do CFO services, but there's no way that I can talk for 4 hours a week to all my clients. And so hopefully this calmed a little bit of those fears, and I definitely appreciate your time today.
Enjoy this episode? Visit our website at summitcpa.net to get more tips and strategies for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.